Hi, Larry Gaines, Power Cycle Trading. In this video, I want to show you how to trade high volatility intraday. So this is the NASDAQ 100 futures. And you know, the volatility on the markets has spiked. Let me show you that real quick. Now from yesterday's close, this is the VIX, the CBOE Volatility Index. So, you know, yesterday's close, you know, the VIX was around 1150. And today it spiked up intraday, early in the day, to over 15, okay, $15. So that's a 34% spike in volatility. So, you know, based on that, you get a lot of good intraday movements. So here's some good ways to trade intraday, and the NASDAQ's one of the really good futures market, very, very tight, very liquid, and it's a great way to participate in the volatility of the current markets. So one of my favorite patterns or setups is when you have, this is the NASDAQ 100 futures, this is a 5-minute chart. So you can see early in the morning, see how tight the market was trading, very range bound. So this is what we call the kind of the cliffhanger pattern. And then we get in this volatility squeeze where the market's really coiling, ready to break one way or the other. Our signal trigger indicators are telling us the potential is for it to trend or trade down. So what I like to do is look for the prior swing low here. So you can see here, so this channel, let it break the first time, fade it. And then you can see how it snaps back up here into the moving average. Then you put a sell order in right below that prior spike low. So right there. So that would have been, you know, 58.74. And then you can see it spikes down to the prior day's low right here. And then that's the point, that first major support. You want to cover that first leg. And look, it snaps back. So then what you want to do is, now you've got this spike low right here. So you want to use that as your next trigger point. So let me back up and I'll show you that more clearly. Whoa. So here is that break, the first break, you fade it, snaps back up. So then you put in a short order right below that. So that would have been right here at 58.58. Bingo. Gets hit to the downside. Then what does it do? It retraces back up, retests that prior day's low. That sets up for the next short trigger where you've got a break of these prior lows here. So you can put your trigger in right here at 58.54, or you could let it come back up again and put your trigger in here at 58.46. So, you know, that's a really one of the best ways that I've found to trade intraday. You let the, you know, you trade off of what we call a spike low, and you trade off of prior breaks, let it fade the break the first time, and then set a, you know, a swing or a trigger price below that spike low. So right here, spike low, right here, spike low, and then, you know, then this retraces back up to the prior low and spike low there. So this move from, for example, right here, 58.52 all the way down here, that's over $900 per contract. So if you did one contract short right here, and look how it just tracked right down below the moving averages all the way down. You know, that was $900. So a way to trade intraday where you don't have any exposure overnight, but you can still make some really good money. Hope this helps. Talk to you on my next video update.